NIO alongside the electric vehicle industry have been under intense pressure and scrutiny for the past few months. The three-pronged attack of the 10-year Treasury bond yield rising, global rampant semiconductor supply strain, and prevalent uncertainty market-wide, tech stocks and growth stocks have greatly suffered. To make matters even worse, these concerns were then compounded by fears of Chinese-based companies being delisted from American stock exchanges. This through the Holding Foreign Companies Accountable Act that was recently passed into law. This sent speculative plays centered in the electric vehicle industry plummeting in valuation. NIO stock in the past few months has lost around 40% of its share value. However, many analysts are slowly but surely beginning to believe that the worst is already behind us. We have turned a new leaf, so to speak. In today's episode, we'll be uncovering some major news coming straight from NIO HQ, analyzing the newly released delivery numbers and Q1 insights, and finally discussing the future of electric vehicle valuations and where share prices could land in the short term. Welcome to the show. My name is Nick. Let's dive right in. Before we get to it today, Webull is giving out 2 free stocks worth up to $1,850. You can trade before and after hours markets. They are 0% commission. The link to this promo is in the description. Check out our Patreon page. We have behind the scenes more content under the radar stocks, and this also gains you access into our exclusive Discord channels. This is where you can see all of my trades in real time, all of my portfolios, and the chat is always popping off. All right, ladies and gents, let's get right into it. So before we touch on the major news emerging, let's first take a look at NIO's share valuations. Now, as I previously stated, the last few months have been extremely detrimental to NIO's share price. However, this does indeed seem to be changing. For the first time in months, NIO was actually trading in the green for 2 consecutive days in a row. Who would have thought? The share price has become extremely volatile in this market, with investors de-risking their portfolios and profit-taking. Now, we do see continued investor interest regarding this stock, in part from bullish indicators released this morning. Now, before I get to my opinion regarding these data, let's first take a look at it. Now, as you may remember, NIO recently announced it was lowering its guidance on deliveries moving throughout Q1 2021. They had originally set guidance for 20,000 to 20,500, however, since lowered this figure to 19,500 on March 26th. Now, this lowering figure was primarily due to the global semiconductor supply strain. This was causing a shortage of chips that vehicle companies were fighting over. Now, it's important to understand that this is not a NIO-specific issue and that we do see other top names struggling as well. Tesla, Ford, GM, and others have all lowered guidance. But regardless of this, we did see speculative and growth investors de-risking and reallocating capital to recovery stocks in their portfolios. This resulted in NIO and other EV companies hemorrhaging valuations throughout February and March. Now, there are reports emerging from China stating that semiconductor supply will likely catch up to demand in the summer months, but we will have to keep a close eye on this. Now, NIO stated that they would shut their production facility down for 5 working days beginning on March 29th, so we are currently in the middle of this pause. Now, released just this morning was news from NIO HQ that they in fact beat their revised Q1 delivery total of 19,500, posting Q1 deliveries of 20,060. This was right on the lower end of their original guidance. Now, what is quite perplexing is why they actually revised down their figure in the first place. And why this is slightly odd to me is because the shutdown of their facility only began on March 29th, therefore only removing 2 or 3 production days in the quarter. Now, with NIO beating their revised guidance means either that NIO was somehow able to deliver a shitload of units in the past couple days, or they actually imposed extremely conservative numbers in the first place. Now, we have seen NIO do this previously, setting low conservative numbers and then typically beating them. This is a trick many growth companies use to keep investor interest high and show continued growth on almost a constant basis. Growth companies obviously need to do just that, grow, and we have seen NIO do this in the past. Now, I'm not sure how it was that NIO was able to beat their recently revised down guidance or why they actually did this in the first place. However, it did, offer some really great entry points. If you have any insight into this, feel free to share with us in the comment section. I'm sure a lot of viewers would appreciate it. Alright, so before I get to my opinions of the numbers, let's first move into the data. In the month of March, NIO hit an all-time new record delivery month, posting 7,257 vehicles, just barely posting the new all-time high, just beating those January delivery numbers. This represented a 373% increase year over year. Now that number is slightly inflated, as you all may remember that Q1 2020 was a rough year, and especially so for mainland China. There were mass lockdowns and virtually no one was buying vehicles. However, this is still a good milestone. I really do find it incredible that even amongst this global chip shortage, NIO is still able to maintain record-breaking numbers month after month. Now, I do think we will have a substantial downturn in April numbers, as I do think this 5-day pause in production will really only reveal itself in the April deliveries, as by this point, demand will likely far surpass supply. Many investors had wrongly paired NIO's lower February numbers to slowing growth. I saw a ton of people online freaking out and selling all their shares, stating that NIO was doomed and February numbers were just terrible. However, this was not actually the case whatsoever. The automotive industry is incredibly cyclical with extremely predictable downturns. NIO had actually forecast steep declines in sales in February due partially to the Lunar New Year holiday and the lower day count. I was repeatedly telling people online that this was predictable, that NIO themselves had guided for this. However, investors not doing their due diligence were selling all of their shares. However, even though we did know this was going to happen, it is nice getting that validation and seeing NIO delivery numbers rebound quite healthily. Now, moving into the model-specific numbers, I was actually quite surprised to see their smart SUV, the ES6, taking the top spot, posting over 3,000 deliveries at 3,152. We had previously seen their newest model, the SUV Coupe, the smallest model on the market currently, with the podium spot, the EC6. However, we have seen that EC6 move into second position, delivering 2,576 units, and their oldest and largest model, the ES8, remained in third spot, posting deliveries of 1,529. Now, what I find interesting is we are beginning to see the stratification between model types. In previous months, we had seen more of an equal general distribution between model types. I do think their ET7 being released in Q1 2022 will quickly become their top-selling model. However, that is a video for a different day. Their cumulative deliveries have now reached just south of 100,000 units at 95,701. They are expected to surpass the 100,000 milestone in the first week or two of April, and this really is incredible. With more vehicles on the road comes increased brand recognition and an increased proportional revenue stream from NIO Power. Many early NIO buyers' free battery swaps are coming to an end, and I do think NIO Power is a complete dark horse in terms of proportional revenue generated to total revenue. We saw other revenue increase in proportion last quarter, and I do think we will see a similar causation this quarter. We see NIO rapidly expanding their battery swapping infrastructure, recently signing huge deals with shopping malls, furniture chains, and the Beltway highway systems surrounding Beijing. Case in point, with more vehicles on the road comes more revenue, and I am thrilled we are seeing yet another ATH from NIO Deliveries. Now, we did see NIO open up huge on the day. I was hopeful this would stick around. However, we are seeing that broad hesitancy within the EV markets. We dropped back down, and at time of trading, we're hovering around the $40 mark. I do think this is going to become a firm resistance line in the next few weeks. However, we will keep an eye on this. As always, I have you all covered. On an overview, I am thrilled with this news. This is nothing too far out of the ordinary. However, to achieve that original guidance really does show the intense demand for NIO vehicles currently. I do think we will hit around the 7,000 for the next couple of months. However, as I've stated in previous episodes, I do think NIO's time in the sun and the golden age of NIO is coming in Q4 this year and Q1 2022. This is when a lot of moving parts all come together, and I think we will see NIO domination. The only way to trade this stock, in my opinion, is long term. I am gaining literally every chance I can buy this stock under $40. I am bulking up for the long term. I do think we will hit $100 per share as the ET7 is unveiled next year. By then, the semiconductor shortage is expected to be completely mitigated within China. We will be gearing up for new NIO Day unveilings, which is expected to have a new sedan. We will likely have 500 battery swapping stations strategically placed around mainland China. Many of these will be Model 2.0, equipped with 13 batteries able to do 312 swaps per day, And we will also have the 150 kilowatt hour battery cell pack in the ET7. This is why I see this time as extremely enticing in terms of the relatively low share value. Don't forget about the Webull promo, 2 free stocks worth up to 1,850. You could trade before and after hours markets. They are 0% commission. It really is a win-win in my point of view. Check out our Patreon page. We have under the radar stocks, more content behind the scenes, and this also gains you access into our private Discord channel. This is where you can see all of my trades in real time, and the chat is always popping off. What a cool community. Anyways, gang, I will see you all in the next video. Take care. Happy trading. Cheers.